Good evening, everyone. Welcome to closing comments here for March 17th. Let's jump right into our charts and see what happened in these markets today. First on the board, we got our June live cattle. We did see this cattle market continue with a light volume relief rally here. Prices continue to push higher up there towards 234 today, but we are still seeing below average volume here. So buying activity coming from the weak hands right now. Bears still are in control here as long as price remains below 236.5. We expect to see some resistance anywhere between 234 and 236 here in the days to come. Look for the sellers to start getting active once again and aggressive up here in the mid 230s. They're going to want to see this market balance out here, offer some lines to trade around before we start to turn this market lower once again. But in the meantime, continue to be defensive and be cautious here. The bulls need to see this market reclaim a couple levels above us still before we can get any ideas about some sustainable upside. In the meantime, these bears still remain in control here, and we expect to see them start to get aggressive here once again in the coming days. Continue to be defensive, be cautious here while this cattle market sorts out this recent volatility. We're going to need a little bit better structure to trade around here if we want some more sustainable upside. So in the meantime, let's just be patient, slow play this thing. There's going to be better opportunities in the future, but in the meantime, we still expect to see those bears get aggressive and active once again here before this week is up. Next up, we got our April feeders on the board. This feeder market seeing a nice rally here today, finishing back up there about 354.5 on this April contract. Once again, another light volume rally here, below average volume here, showing that the buyers are kind of pulling back here off of these oversold conditions. Just kind of seeing a bit of a relief rally here, a little bit of a dead cat bounce at the moment. We still expect to see those sellers step back in and try and turn this cattle market lower. Feeders should try and offer some resistance anywhere here between 355 and 360. Kind of got some wide ranges. Still going to see some of that volatility sticking around, but we expect to see those sellers continue to jump back into this market in the days to come and try and take this thing lower. Just seeing a little bit of a relief rally here at the moment off these oversold conditions. We are still seeing lower highs and lower lows, confirming that downtrend, and we should see those bears continue to try and turn this market lower here in the days to come. Prepare for this market to start to balance out here, and we should see some weakness start to step in before this week is up. Next up, our May corn futures on the board. We did see just a pretty wide choppy range day here. Price just hanging out right here in the middle of this prior range. After the early failure this week back below 465, we still are anticipating range conditions here as long as we remain between 445 and 465. In the middle of this range, we should see more choppy action. We have seen some pretty wide ranges and a little bit of an uptick in volatility here for this corn market, so expect to see that stick around. But in the meantime, we still expect to see these range-bound conditions between 65 and 45 continue to hold this corn market. Next up, we got our crude oil prices, crude oil market. Price today was just kind of balancing out inside that prior day's range. Very unexciting day here compared to the last couple weeks for this crude market. Not a whole lot of directional clues here right now. This market is just kind of digesting this recent volatility, and at the moment, failure to see any sort of escalation over there in Iran. So we should see these oil prices start to quiet down a little bit and settle back down here towards Earth into the 80s. So at the moment, we are still trading below our pivot points though for the week. So while we are chopping between 92 and 99 here, don't really expect to see any good positions. If we do start to get offers down here below 92, we should see this thing kind of come back down here towards these averages and come back to earth a little bit. We might be at a point here where this 120 is going to be the high at the moment, and we should see those bears start to trickle into this market, barring any sort of escalation over there in Iran. We should see this crude market start to settle back here and restore order a little bit. So look for that pullback to come here over the next couple days. And next up, equity markets seeing a little bit more of a rally here today. However, the day session just had pretty choppy action. The S&P did poke up there, testing that 20-day average from below, briefly getting up there above 6,800, but settling back here today. At the moment, we are seeing just kind of a little bit of a bounce here off these overextended conditions. We did see that weak finish last week down here at near those lows. So far, we are getting a little bit of pullback. We should expect to see some resistance up here at these averages from below on the S&P. The NASDAQ continues to hold those range lows, but over the last couple of weeks, we haven't really been able to chew through the middle part of this range. So expect some more choppy action down here in the low to mid part of this range. The Dow has seen a nice break all the way below that yearly opening range, pushing down to some overextended levels here, reaching 46,005. This market has kind of been the weakest here amongst those indexes in the last couple weeks. Ever since we started to slip below those averages, this prior leader has now become the laggard. Expect to see some resistance up here as price pulls back up into these averages. The selling pressure is not over yet. Mega caps still looking rough. A lot of mixed results out there in those big components. So there's going to be better opportunities to put money to work. Today is not that day. Continue to be defensive and raise cash here while this market sorts some of this stuff out. At the moment, we already seen kind of a little bit of a relief rally, but we should see some more selling pressure start to hit this market again in the days to come. Continue to be defensive here, and we'll continue to monitor the situation and wait for better times to put some money to work. So in the meantime, sit back and let this market kind of digest this recent volatility, and we'll have some better opportunities in the future. So that's all I got for tonight. Thank you everyone for tuning in. Catch you guys tomorrow.